I was really looking for a way to be self-sufficient as an adult. Working was tough. I really enjoyed it, but I was on this never-ending quest to figure out how I might be able to support myself, not be a burden on my family, and thankfully came across this concept of passive income. So that really helped me make the switch.
Welcome to the Real Estate Mogul MD podcast. Thanks for tuning in and taking control of your financial future. This is a show where we not only motivate and inspire, we give you actionable real-world experience to help you live life by design. You'll hear journeys and stories from other physicians, investors, coaches, consultants, and entrepreneurs. And now, here's your host, Brett Riggins. Today, we are talking multifamily. I am so excited. Today's guest currently has 1,457 apartment units. That's almost $250 million of assets under management. And these aren't just all syndicate. Not that being a limited partner is bad. It's these are general partner deals. These are operator deals. What I love about that is we get to talk with the guest and learn more about what it means. I see that she wrote in her bio, rigorous analysis, risk assessment, and deep appreciation of emerging trends. And we're gonna see what's an emerging trend. How do I look at an economy? How do I know this is going to be a good deal? Who do I need to talk to? What are some sites? What are some numbers I need to look at? We're going to drill down into this, and we're also going to take a look at the multiple deals that she's gone full cycle on a couple of them, really fast full cycles. Everybody, please welcome from Sylvis Capital, the founder, Amy Sylvis. Ms. Amy Sylvis, welcome to the show. How does it feel to be Amy today?
Amazing. I am blessed and grateful and really excited to be able to talk to you and add value to your audience today. Thank you.
Awesome. Well, I'm sure that you have a ton of it. I'm excited to jump into it and blessed and grateful. Wow, how much better is every day when you wake up like that?
Yeah, I thankfully at a young age learned that reality is really what we created. There's so much that our mind takes in every day, and we can really attune it to what actually comes through to our consciousness, not to get too hippy dippy on everybody. But yeah, when you learn that skill, it's really, you can make your life and your days anything that you want. And I choose to make them joyful.
Yeah. Do you recall what you asked me how I was? Do you recall what my response was?
I don't.
Never been better.
Never been better. That's right.
Never been better. That's right. Yeah. Living life that way is remarkable. And yeah, it's how we perceive things. And we won't get into, did you say hippy dippy?
Yeah, I'm from California. So anytime you talk about things that are a little more mindset, people are like, oh boy, where's she going with this? So
all right.
Just being silly.
Right on. Awesome. So we are on the Real Estate Mogul MD. A lot of our listeners are physicians. I am not a physician and you are not a physician. So who is Amy Sylvis?
Sure. So I'm out here, as I mentioned, in Los Angeles, California. I'm 42 years old, live with my amazing husband, Joel, and our large extended family out here. And love to travel internationally, really enjoy college football, and enjoy giving back to the charities and causes that we strongly believe in. And I syndicate real estate.
The important part, being on the Real Estate Mogul MD. Oh yeah, and by the way,
yes.
So I see 3 letters here on your LinkedIn thing. That's one's a U, the other one's an S, and the other one's a C. USC. So you part of that's the Trojan Nation, right? Is that?
We are. Yeah. We call ourselves a mafia. I don't know about nation, but yeah.
Yeah, I am not, but I've had some guests on the show who also went to school there. And it's like this clique, like this group, and you call it a mafia. So yeah, just that feeling of brotherhood and sisterhood. Very cool. Yes. So there, I see that you have marketing there. You're marketing in the USC Marshall School of Business as well too. Some things that stand out along the way. How did you go from marketing into real estate? Like, tell us a little bit about that swing.
Sure. I'll give you a brief overview and we can go as deep as you'd like. But when I was born, I wasn't sure I'd always be able to trade my time for money. Obviously, this wasn't the thought of a 4-year-old. But as I grew older, was fortunate enough to go to high school, to college, I lived with cystic fibrosis. So being in and out of the hospital was really a big mainstay of my life. And so I was really looking for a way to be self-sufficient as an adult. Working was tough. I really enjoyed it, but I was on this never ending quest to figure out how I might be able to support myself, not be a burden on my family, and thankfully came across this concept of passive income. So that really helped me make the switch from corporate that I loved. I loved working in biotech. It was an incredible industry, but I wanted to make sure that I could initially help myself and then others generate passive income to live life more on my terms.
And that switch, so you came across it, stop trading time for money. I hear that a lot, but what was like, where did that lead you? Like, what were some of the steps, like these benchmarks along the way? Because right, we talked about it, the hippy dippy on the front side was it's a thought. Everything starts with a
Yes.
thought. How we
Yes.
perceive that thought, we create motion, we create action,
Yes.
and then we tie these experiences together. So you've thought, and you've now is a reality. And that reality looks very nice because you're almost 1,500 units that you have. So congratulations on that. But tell us a little bit about these benchmarks along the way. When you got from an idea to being Amy sitting at home comfortably and with this passive income.
Yes. Yeah, so it was ironically right after I got my MBA, which I got because I thought at the time compiling cash and being able to draw on it when I was too sick to work would be the answer. So when I read Rich Dad Poor Dad, it really opened up my middle class mind to something different. I grew up, my father still does physical labor in construction. This idea of hard work, grinding it out, nothing wrong with that if you're able-bodied and able to, but the mindset shift helped me tremendously of, again, as you said, just this possibility that there is something else. I could earn money while I was in the hospital, while I was too sick to work. So I hired a coach, I hired mentors. I really I deployed some of my savings into investing as a limited partner to learn the business. It took me a good long 10 years from the time that I realized that this was a possibility until I actually got into the industry, mostly because of health challenges. But that's really been, those are the major action steps I took. Throw in a little bit of forced medical retirement at the age of 35 and a miracle medication that came to the market for cystic fibrosis when I was 38, about 4 years ago. And that's really the recipe of how I arrived where I am today.
And now I'm looking at sylviscapital.com.
Mhm.
And along this journey, now you're at a place where you're sharing your experience, you're sharing that knowledge that you've turned into wisdom, because this is implemented. You've taken action on this knowledge, and it's wisdom. This is real world stuff. This is an impressive portfolio that you have up. What was the very first property that you acquired?
Yes. So as a limited partner or as an active partner? Just want
Let's
to make
do both. Let's do
okay.
limited first.
Okay. Yeah, the limited was investing alongside a really great experienced team that I was interested in getting to know more and eventually partnering with, and that was in Chattanooga, Tennessee.
Hmm.
Yes,
Very cool. So in as a limited partner, were you accredited on that first one, or you
I was
were not?
not.
You were
No,
not, you was not, you were not, you was not,
I were not. I was
you
not.
were not. So whatever way you weren't, um, and you come in and not accredited and you make that first deal. What was the cycle of that deal?
Yeah, it was around 4 years. Chattanooga back in the early 2010s wasn't really on a whole lot of people's radars. So we fortunately got in early as the market continued to increase with VW was setting up their first manufacturing plant there. And yeah, had incredible experience, learned so much. Growing the money was spectacular, but being able to ask questions, understand, and see what good looked like from another real estate syndicator was an incredibly helpful experience.
Very cool. And then that structure, if you recall, was that like a waterfall structure and then a equity multiplier on the turn?
It was just a simple 70-30 split.
70-30.
Yeah, so no
Interesting.
waterfall. So yeah, the GP got 30% of all cash flow and of all yeah, equity upon distribution, and then the LPs got a pro rata share of the 70%.
And that on the equity as well, on the exit,
Yes, yes, on the
70
exit.
30.
Mhm.
Boy, that makes it simple, doesn't it?
It was nice. Yeah,
Yeah.
yeah.
Awesome. Do you remember what your return on investment was for that overall, all said and done?
Yeah, so it was a two equity multiple at just 4 years.
Wow, that's awesome. Yeah,
Yes,
great
it's
first
amazing.
deal, huh?
Yes.
So from there, that's kind of exciting. And then that's limited, meaning that you're passive. You don't get to make decisions. You sit back, what I call sitting on your hands. You can't do anything when it comes down to any of the decisions, any of the operating, which some people like, some people don't like. But
Right.
you decided that you like to do that kind of stuff and you want more of the involvement in the process. And it's led you to become a general partner.
Yes.
What did that look like when you became a general partner? Did you find the people to have the team to have the general partner and then find the acquisition?
Spot on. And that was really the inflection point for me. I did spin my wheels quite a bit as a new person in the industry, thinking I just needed to do all parts of this business. And once I found like-minded business partners that we had complementary skills, the same goals, et cetera, then we were able to find a property together that worked actually also in the great state of Tennessee
Hmm.
to be my first acquisition in Clarksville.
Clarksville. Let's see. Is
Yes.
that on your
Should
website
be
here?
under dispositions. Yeah.
Oh, what does dispositions mean?
So it's when you sell, when you go full cycle.
Okay, so this is let's see, Cumberland Commons.
Yes.
So this is a 58 unit. That was your first property, and it looks like closed in 21, and you're exiting. You exited already?
Yes, we did.
Okay.
Amazing market. We do a ton of market research. So we hit the market at the right time. We're able to implement our business plan fairly quickly, and our investors always want their return of capital as soon as possible. So we were able to
Mhm.
exit that quickly as well.
Very interesting. That was 58 units. And when
Mhm.
you say you do a ton of market research, what is it that stands out to you? Like, say, this particular market
Yes.
in Clarksville, Tennessee,
Uh-huh.
what stands out to you as, hey, this would be a good spot to buy now because we know X, Y, and Z is going to happen in the next 3 to 5 years?
Yes. So Clarksville is about 50 miles or 50 minutes, excuse me, northwest of Nashville, Tennessee. A lot of folks, I think, probably know what's going on in Nashville. Massive population growth, job growth, very business friendly state, very friendly, business friendly local environment as well. So we knew we could take advantage of people that were priced out, even in terms of renters in the Nashville area, and provide them with great housing in a commutable distance. We also knew jobs were growing in Clarksville proper, in addition to Nashville. So if people weren't commuting into work in Nashville, there were sufficient well-paying jobs to be able to for these folks to pay their rent. So yes, that was the market research that we did to keep it short and sweet. And we knew without a shadow of a doubt that the market was going to grow. And lo and behold, it really did.
And to complete these types of researches, um, are you working with vendors to complete that research, or are you going to different websites and stuff like that?
Yes, free and paid research. I've got a very complicated spreadsheet where we look at a bunch of different data points to understand and be able to predict what's going to happen in a given market moving forward.
And which partner had that background? To me, that sounds more like economics, right?
Yeah,
It's
I
you?
love to do it. Well,
Yeah.
there's a lot growing up with with an illness that requires quite a bit of home care, metrics, measuring, data compilation, analysis, and then coupled with what I used to do in biotech, it was pretty easy for me to be able to do that. My business partners helped as well. It was not one person, myself included, spearheading it, but definitely a passion of mine, something I continue to do and be a large contributor to.
If you had to grab the most important factor of the economy, what is that one point or that one thing that you look at that you need growth in?
Household formation.
Household formation. What does that mean?
So a lot of people think about population growth, but the reality is populations or individual people don't necessarily rent apartments, households do. So if you have a whole bunch of people migrating to an area, but they decide to double up, triple up in an apartment unit, that's still just one unit that you're renting out. So as people's wealth grows, as people age, we're talking about demographics out of their teens go off, become adults. Those are households that are formed. So understanding that really translates quite nicely to demand for apartment units.
Very interesting. That's
Yes.
cool. That was a fun question.
Yeah.
What was one thing about, I think, kind of just digging in on this market analysis, because it
Uh-huh.
seems to be key when you can execute a strategy like this and do that exit that fast is really important. Um, what is this something that we could give the listeners, whether that they're going into that LP kind of position and saying, okay, these guys say they know the market, but what else should I be looking for? So that household growth is huge. What
Yes.
are some other things that kind of like maybe number two and number three to look out for?
Yes. I would look at wage growth. Depending upon how you're investing, if you're doing a value add strategy, which is what we often do, where we're taking units that are kind of old and tired and renovating them to a nicer but also more expensive price point, you want to make sure that you've got a population that can pay those nicer rents. There's really no sense in over renovating for a population that says, look, it's great that this is available, but my wages are not increasing. I can't pay for that. So looking at wage growth would be very important. And then I would zoom out and also look at areas that are tenant friendly, landlord friendly. If you can't evict, I'm out here in Los Angeles, right? So I
I
understand
think I
this
just
very.
heard the police siren too. Is
Oh,
that
sorry
your
about
house?
that.
Is my yeah,
Sorry.
no
You
worries.
want me to repeat what I said?
No, I was just throwing a joke in there, of being, but
Sorry.
go ahead.
But we are seeing more municipalities, more states talk about rent control, eviction moratoriums, or making it more difficult to evict non-paying renters. It's incredibly important for folks as limited partners or active to be able to look and understand what local and state laws are in that respect. Because if you have non-paying renters for 6, 9, 12 months, that's a huge hit to your NOI. And often, sadly, residents get wind of playing the game and you can really set yourself up for some difficulty. So I'd look at those additional 2 points.
Very cool. So I love that. I know there's tons of value in that. Even if you're just starting to evaluate opportunities or even in the game. I mean, so many different operators have different ways of different perspectives when they're looking at opportunities. So that one's full cycle. That was a quick cycle too. I mean, that's really quick.
Not
Um,
typical. I'll be full
right.
disclosure. That is, yeah.
Yeah, no, that's
Yeah,
exactly.
it's not
That's
typical.
really quick cycle on that. Just a little over a year. So I see another one on here. This is still a pretty quick cycle for 2 years.
Yes.
The Knoxville Trio. It's a
Yes.
3 property portfolio, 67 units in Knoxville. Tell us a little bit about that one.
Sure. Again, another really sexy market where inventory was constrained. Knoxville really hasn't created a ton of new apartments. There hasn't been a lot of building, at least at that time. It's ramped up a bit now, so the dynamics have changed. But when we first purchased in 2020, it was a great opportunity with a wealthy or a income growing population to be able to take older, more tired units built in the 70s and give very nice polished upgrades that the tenant base wanted and that they could also afford.
When you say that inventory was constrained, how are you seeing the like where do you go to see the new build piece, or how many new units are available in the market? What type of websites, or how do I do that? How do I find that?
Yes. So there are many different ways you can do that. There's a free service called ALN. They publish monthly reports on almost every major MSA in the United States, and they'll let you know what sort of inventory is currently being built, when it's planned to be delivered to a given market. So that's completely free. You can also talk to brokers who have access to much more expensive and paid resources like CoStar, where you can
Mhm.
get an even deeper analysis. But often brokers will give that to you for free if you're looking in the market and want to understand. They're keeping on top of this information themselves as well. So most are willing to share that.
And you said the word broker, which is a key piece
Mhm.
in any team. I see you in, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10, 11 different markets. How many brokers do you work with?
Quite a number, quite a
Mhm.
number. This is a relationship business, right? So I think the biggest aha for many people when they learn about commercial real estate or multifamily is Unlike single family, where often, cash is king, or the price, whoever pays the highest price is awarded the deal. That's not necessarily the case in the multifamily, industrial, or other commercial real estate space. So having those relationships, being easy to work with, all of that is very powerful. So I cherish those relationships quite a bit and work to make them great constantly.
If one of our listeners are going to go into a new market, say, something similar to Clarksville, like what's the population of Clarksville? Do you remember?
I don't
It's
know
under
off
a
the top of my
million.
head.
It's
Yo,
well under a
definitely. Yeah,
million. Yeah.
definitely.
So
It's
we're looking like
probably
maybe
close to
200, 300
200,000.
somewhere.
Yeah, that was going to be what I recall.
So we're going to say that they're not going to get a lot of that big city data in that one. So that may be a little more difficult. What would you say would be how would you go find a broker in Clarksville, Tennessee?
Well, since they're so close to Nashville, I would focus on the next major city
Interesting.
and see. Yeah. So in that example, you'll definitely see brokers that serve Nashville and then Clarksville also by extension. So yeah, if you can find the next largest MSA, I would start there. If you happen to be interested in a market that isn't within maybe a 60 or 100-mile radius of a large metro, LoopNet can be a good resource there. You can look, and you may not necessarily want to buy the properties that are on LoopNet. You may not be interested, but you can see the brokers that are listing there and start from there.
And it's almost like cold calling. I mean, there's no
Mhm.
other way of filtering them out or looking at them. It's just who's got listings. I'm going to call them and ask them questions. And in these questions, I'm sure the listeners can tell that you are experienced, you are skilled. This is something that you do all the time. So through that line of questioning, you're able to gauge the quality of that broker. Is that kind of how that goes for you?
Yeah, I generally assume that brokers are, very competent and are good at what they do. What I'm really zeroing in on is what type of deal flow do they have? So are they typically people that list, 5 plexes up to 50 plexes, and that's really their niche? And if I'm a 100 plus unit buyer, maybe that's not the person for me. Or, maybe there's there are some markets in the US where there are kind of good old boys clubs where brokers and buyers just only work with each other. It's a very tight knit group where it's hard to break in. You can sense that often through having a conversation as well, how open a broker is to dealing with a new client. So, yeah, lots of different things to assess there in terms of what might suit your goals.
Awesome. And you threw out the hypothetical of 100 plus. Are you qualifying yourself as a 100 plus buyer?
Yeah, our last purchase was well over 100 units back in 2023. So yes, we find that economies of scale are very much in our favor at the 100 or 150 plus unit mark. So we're able to, for anyone that doesn't understand economies of scale or isn't familiar with that term, we really want to be able to hire a full-time leasing agent, hire a full-time repairs and maintenance person on site. You have to have a certain amount of revenue, a certain number of units to spread that expense across to be able to sustain and pay for that type of service. That can make your job as an asset manager and then your property management job much easier because you have those resources. And then, of course, by proxy, reduce risk for investors as well.
So that first acquisition, I know things change along the way, but that 58 unit
Mhm.
acquisition, how many people were in the partnership? Like, what does your internal team look like for a 50, 60 unit acquisition like that?
Yeah, most syndications have at least one business partnership, sometimes even three different businesses come together. These are not easy deals to operate across the board. The expertise, the work, all of that goes into making a successful property that gives the returns at or at better for our investors takes a lot of people. So that particular deal was between myself and one other business partner.
So two people, and you say businesses, does that mean that they have teams with them when they come to partner?
Yeah, so that business actually was a little bit unusual. Who I partnered with, they actually have 5 general partners within their group,
Oh, wow.
a little bit more than what we typically see. But yes, that was the organization that I decided to partner with.
Okay. And did they bring the acquisition opportunity then in that particular deal?
I did.
You did. Come
Yes.
on. That's
Yeah.
awesome. That's
Yeah. Thank
awesome.
you. Thank
That's
you. Thank
awesome.
you. Yes.
And then growing that to something, I mean, I can see through your history here, once you bumped above, really that 80 was kind of like a turning point, it looks like. And then the
Mhm.
110, 276, 220, 152. I mean, you stayed above from that point, even hitting that 442 in Dallas. What does that look like for your team? Has it diversified? Has the players changed at all when you went above that 100 mark?
I wouldn't say the players have changed, but I would definitely say it was a mindset acceleration for myself because it
Oh,
does.
you're gonna get hippy dippy on us?
Yeah,
Ah.
there's the California lady again. But yeah, I really intentionally don't have a whole bunch of business partners just because I want to develop these deep relationships over time, which helps me better able to predict, outcomes, scenarios, and all of that. So while I have expanded to just 3 different business partners that I've done deals with, I wouldn't say things have changed tremendously. The internal teams in terms of property management and those partners have switched a little bit, but other than that, nothing dramatic.
And looking at the portfolio now with these different, let's see, we're looking at 2 of them have been disposed. We've got 2, 4, 6, 8, 10 properties in the portfolio.
Mhm.
What does your time involvement look like for 1 month on that entire portfolio?
It really depends on where we are. I hate to give this "it depends"
Mhm.
message to you, but taking over a property that we haven't owned, that we've recently purchased, vacating units in order to renovate is a completely different and more involved scenario than we've already renovated every single unit in this property and now we're just dealing with, regular renewals. So if we've just acquired something like we had several big acquisitions in 2023, there's quite a bit of time that is spent working with property management, making sure we're hitting our metrics, troubleshooting, just all of these things. It can take quite a number of hours. But some of the more mature areas of the portfolio, yeah, we can spend just a couple of hours every week making sure and checking in to make sure everything is steady state and is remaining so.
And you're pretty active in these partnerships, it sounds like. So it
Absolutely.
sounds like it's easy to me. I'm hearing you at least 40 hours a week doing this. Is that true?
Oh, yeah,
Yeah.
easily.
Yeah. So it's active, passive.
Right. Yes. Real estate is so interesting, right? A lot of people call it passive. I think if you're a limited partner, it is absolutely passive. But if you're managing, this is a business, right? This isn't just an
Mm.
investment. I run a business.
Each building is a business.
That's
Yeah.
absolutely correct. Yes. So, yeah, it is. It is definitely anything but passive.
Interesting. Um, so exciting. I could keep going on and into the never-ending depths of this. It's so amusing and I love it. And it gives so much to people. Like
Yes.
when you do have that mindset shift and you
Mhm.
separate your time from money or understand that, hey, I've got to do this, I've got to separate this. Real estate is one of those asset classes where, of course, I preach day in and day out. And it's like, I think everybody should do real estate, but real estate's not for everybody.
Right. It is
But
not.
for me, it is. I love the pieces. The entrepreneurial aspect of it too
Yes.
is because every building is a business. And
Mm.
the economies of scale, being able to build these multiple businesses, but keep things simple enough so you're not pulling your hair out, having the right people on your team. So I'm not, we spend so much time disassociating and are associating ourselves with the right people, disassociating from the wrong people. And there
Yes.
are certain times when you create these types of businesses where you may stumble and fall and find yourself back down in the ditches with the people you don't want to be around because you haven't built this business the right way.
Right.
So it's so much fun. There's so much going on there, but ultimately it is wealth creation because we're talking about returns typically on the cash flow returns. These equity multiples are monstrous. So that's where that massive wealth is created. It's passive. Now we'll get this monthly income stuff, but those equity multiples are life changing.
I love that you say that. It really is almost hard to believe until you live it. And then once you see it and you live it, you go, oh, okay, I'm on to something. I don't think
Yeah.
I'm going to step away from this anytime soon.
Yep. That's awesome. It's very exciting. So back to the sylviscapital.com. You are a wealth of knowledge. I know on here you've got so much information. You talk about your properties. We hammered down on a couple of them here today. The cool thing I like about this website is you've got more information on there, and you actually have a webinar too that you help share the knowledge. I wouldn't say necessarily educate, but just share that knowledge and invite everybody into this. And a
Yes.
lot of our listeners are are in the world of medicine, and
Yes.
a lot of our listeners actively trade time for money and
Mhm.
trying to find that path of, hey, I've got this job. I love this job. I'm passionate about doing this. And I'm fortunate. I'm blessed. And I'm grateful that I have this high income. But what do I do with it? I don't have any time to chase down tenants, right? No, this is the thing. Generate passive income in real estate without the hassles of tenants, termites, and toilets. How about that?
It's true. Those can be a big pain. I
Oh,
occasionally run into some people that don't mind it, but it's safe to assume most people that is a pain they do not wish to undertake.
in the years, in my experience, those three words right there, I can tell you plenty of stories.
Get it.
But it's all there. So beyond all of that, the ability to limited partner with an active partner, general partner, to provide that information and that opportunity, it's here. Sylvis Capital is the spot. Sylviscapital.com. The one and only Amy Sylvis, who's the founder and experienced portfolio builder, handling the tenants, handling the termites, and handling the toilets. Right? How about that for an outside? I've got one more question for you, Amy. If you
Sure.
could look back 10 years and say you found yourself next to somebody who's coming out of maybe the W-2 world, maybe in a direction similar to marketing, working in corporate America, but had this seed planted of, hey, I've got to do something different. And you found yourself sitting beside that person, what would you tell them?
I guess my favorite thing is choose your hard. I don't mean to make this negative, but if I recall the fears, the intimidation, and all of that I felt when looking to make that switch, knowing, as you said, with that seed implanted and knowing, this is really where I could get more freedom, more security, all of that. There seems to be risk, but there's also so much risk in just staying in a W 2 on depending upon one stream of income. We all know that this is a situation of choose your hard. It is hard to leave your job and venture out and invest. It is also hard to depend on one stream of income, have a big corporation or a small one, really control your time, your income, and all of that. Choose your hard and follow your heart.
Choose your heart and follow your heart. And it's all going to start in your head. It's
Yeah,
going to
there you
start with
go.
that
Perfect.
thought, that mindset piece, and it requires that mindset shift.
Mm-hmm. Yes.
And all the listeners out there are, whether they already invest in multifamilies, maybe they have single families, maybe they're just considering it. Maybe they just stumbled upon this podcast accidentally. Any of them, it's the perfect time to choose your hard and to have that mindset shift. Go to places like sylviscapital.com and learn. There are other places where you can learn. This is the one that's here in front of us now. And Amy, you've been absolute wonderful. Just sharing all of this knowledge and experience with us. It's absolutely wonderful. Thank you so much for your time today.
Oh, this is such a pleasure. Congrats on such a great podcast. I appreciate you having me here today.
Thank you. Absolutely. Thank you so much to the listeners out there today. I love thanking you for your time, but more importantly, for your attention. Because if we don't get your attention while we got your time, then what is it that we have? And just remember that too, as you're going on through life, if you have time for somebody, make sure you're giving them your attention. Thank
Mhm.
you for your attention today. This is the Real Estate Mogul MD.